From the outside looking in, it can sometimes appear that peak performers have an elusive talent or skill that sets them apart from the rest of us. However, what usually sets peak performers apart isn't what they can do, it's what they will do. You are listening to the Trading Edges Podcast, the podcast dedicated to seeking and sharing the best ideas and principles from peak performers across all domains of performance and achievement to help you discover your full trading potential.
Hi, welcome. This is Houston, and thank you for tuning in to the 9th episode of Trading Edges, brought to you by thetradingedge.org. I just want to thank everyone first who's tuned in and left us feedback. All your feedback, both positive and constructive, has been invaluable, and we've got lots more great guests and topics lined up, so as usual, please stay tuned. If you have any comments and ideas for the show, please drop them in the comment section of this episode. I read all the comments, so let's keep the conversation going. As usual, if this podcast serves you, please leave us a review on iTunes. And if you know of anyone who would be served by this material, we'd love for them to find out about it, so please share with them. Now let's talk about the show today. Between all the elements in trading that traders focus on and can focus on, risk management is often overlooked and underappreciated. Today, I bring on Michael Toma, who has a long history as a risk manager and as a trader. And I brought him on to talk to us today about not only the importance of risk management, but how risk management has a lot more to do than just stop management and loss reduction. Now, Mike has a great way of bridging the topic of risk and helping traders understand the real applicability of risk management, not only to our trading, but more importantly to the sustainability of our trading businesses. Now, in this show we talk about some big ideas, but here are some of the really big ones. Number 1, the 4 areas of risk management. Number 2, the importance of trader development. Number 3, why the focus of your trading needs to be on business plan execution. Number 4, why it's important to develop key metrics around compliance and to really reward yourself for trade compliance and not P&L. Number 5, here's a big one, why you need to fire yourself as a trader and instead hire yourself as a project manager. Number 6, the importance of structure in your trading and the importance of finding accountability. Number 7, why price and your P&L are probably the 2 biggest distractions to your trading. And he shares a really cool exercise on trading using just internal indicators. And finally, number 8, Mike shares a really great tactic, which I've used myself, on how to increase the size of your positions reasonably or responsibly. So, as always, you can find the show notes, transcript, and resources at thetradingedge.org/episode 9. Now, on to the interview. Hello, and welcome to another episode of Trading Edges. Today I have a great guest on the show. I want to first just begin by welcoming Mike Toma. Hi, Mike. How are you doing today?
Good afternoon, Houston. A pleasure to be here.
Yeah, absolutely. Mike is actually the author of a great book called The Risk of Trading, Mastering the Most Important Element in Financial Speculation. And we're going to talk a lot about that book, but a lot about his other ideas as well, because I'm sure Mike has a lot of stuff to share with us because he's been trading and around the business for a long, long time. So I'm very excited to get deeper into our story. Before we begin, though, Mike, can you just tell us a little bit about yourself? Tell us about your trading background and maybe just kind of what you're doing today.
Sure. I got started way back in 98. It seems like yesterday. Mm-hmm. I was one of the So's Bandit era guys who came out of there. And to be honest, I really had no clue what I was doing, but I was fascinated by the lights and everything like you hear a lot about today. But I really realized very quickly that there was a core element of my background in my corporate world, which was risk management and process improvement, that I felt I can bring to this business. And that first stint, I actually broke even, and those commissions were pretty high back then in the late 90s. So for breaking even the first time, I was frustrated, but I felt like I can do something with this. So I went back to corporate life and continued on my risk management journey, mostly with financial institutions and insurance companies. But then, the burning edge came back, and I said, I need to give this really a full-time go. And then I really never looked back. And I'm sure we'll talk about, obviously we're going to talk about risk management in our discussion, but really how some of the corporate risk philosophies, what you see in corporate America, really can be applied to the trading world, and specifically for traders trying to get to that next level.
Yeah, we'll definitely talk about that topic, because it's funny. Risk management is sort of the redheaded stepchild of the trading game. It's not the sexy, sizzly part that everyone wants to talk about. Everyone wants to talk about setups and indicators and holy grails. So before we get any deeper, why don't we just first kind of define for the audience, what is risk management? Most of us, when we talk about risk management, we think of, stop losses or maybe some sort of loss reduction strategy, but give us a broader swath around what risk management really is.
Sure. And it's probably one of the most, and I say this as a risk professional, probably one of the most boringest topics or questions one can ask in a seminar, but I'll put it in a perspective that will, again, help traders.
Yeah.
Risk management is a concept, or first let's define what risk is. What do we look at that? And a lot of traders will say, well, that's how much I could lose on a trade or something like that. But, really looking at the core concept of risk, it's really simply a chance of loss of anything, all right? The chance of losing something. That could be money, it could be opportunity, it could be time, all right? But in the trading world, I like to kind of redefine it as any outcome that is different from an intended result. Okay, so obviously on a trade or in a trading program, you want to have winning trades. Well, obviously, if that doesn't happen, or at least consistently doesn't happen, that would be a result that was, I guess, unintended. So when we talk about risk, let's think of it in that framework from a trader's perspective. We wanted to do something, we walked out, it looked like it was sunny, we didn't bring an umbrella, and next thing you know, it's raining on our head. So how do we do that? Risk management really is the concept of protecting assets. Okay, and again, thinking like a trader or in the trading business, we're trying to manage our assets so we could take advantage of an intended result. Obviously, a winning trade, successful trading strategies, things like that. So really, in summary, not to get too winded on this somewhat dry topic, but what is our assets? We've got to look at what is a trader's assets. Well, capital obviously is a key asset that we want to, again, protect.
Yeah.
But what are some of the other things? Look beyond that. How about keeping the trader solvent? Okay. Once the bankroll goes, or that's it, game's over. So really, a key risk management element that I want to see traders engage in is, what are we going to do to keep you solvent? Let's put aside the strategies. Let's put aside the I got the holy grail. What is going to keep you solvent? Get you to trade another day. Okay. For those traders maybe looking at something, maybe a little different path, say their goal is to work for a hedge fund or manage other people's money. Well, one of the risk components that you want to consider is keeping a compliant track record.
Right.
Okay? Because that's something that you could do everything in the world, have 100% success in winning trades, never have a losing trade. But if you took all these wild risks and leverage down and all these things, a hedge fund will just throw you out the door. So look at what we're trying to protect. And obviously for most traders, they're going to say capital, and that's fine. We'll go with that.
Yeah, and your book, and I'll just talk it up for a second because I really enjoyed your book, The Risk of Trading. Most people, like you said, they think that the topic is dry, but when you actually begin to see the applicability of risk management to various elements of your business, that's when the light really popped on for me. So, I was going to read the book because I thought, maybe it's going to give me some interesting ideas around, stop management and, how I can manage my trades better. But then, you get into some deeper areas like, how do you make sure like you said, the business remains solvent? So as a, individual trader, you need to think about not just your trading strategies, but how do you actually maintain that business for the long run? But I think you really break it down well in what you call the phases of risk management, or the process of that. Can you talk through that sequence? You talked about risk identification, risk assessment. Maybe just talk us through those 4 phases.
Sure. And again, just to your point, and in fact, I was listening to one of your prior podcasts about having fun in this business. This, I think, is very essential. I mean, if you're not getting engaged over, winning trades and good, solid execution of trading and being successful, you need to get out of the business because this could be a very exciting business. But like any business, there's some core fundamental things that have to be taken care of, so to speak.
Yeah.
And risk management is one of them, and I would think obviously the most essential part of it. But going back to your question about the phases of risk management, and again, we'll take it out of the sort of the corporate world, but again, they apply directly to trading.
Yeah.
The first one is identification. So what we want to do is to really identify opportunity, okay, where, again, getting back to risk, identify opportunity where these positive outcomes can come about. What are the components that need to be done to identify those potential optimal situations? We also want to identify what our areas of concern or weaknesses are. Okay, and we'll talk about probably later in our session about developmental opportunities and how we can become better traders. But we want to identify those right at point, because if we don't address those, they will come back to haunt us in our ultimate goal.
Yeah.
Okay. Continuing, the next part of risk management is once we have identified what our potential exposures are, we want to assess them. Okay. If thinking back, say in the corporate world, if you manage, say, a supply room, and you found that there was a pencil missing, every month or so. Well, technically could be a situation there, but really the risk is so minimal that we're not going to worry about it. So assessment is looking at really severity. What are the big problems that I need to be concerned about?
Right.
What's that black swan that, again, is going to affect my goal? Is it a pencil in the supply room? No. But is it blowing my account? These are the things that we really want to focus on, particularly early in a trader's career. Okay. Then once we assess those, what do we do to control that? Okay. So in the trading world, we can do a lot of things when we see an opportunity in a trade. We can avoid it because all the things don't match up that we're looking to do. It sounds easy, but a lot of people risk avoidance is a very challenging thing to overcome. They feel like they always have to be in the game.
Yeah.
Prevention, which is reducing frequency of losses. Okay, even though they're small, we want to reduce the frequency. We also want to reduce severity. Okay, again, so we want to reduce the amount of losses, but we also want to reduce the big one. Okay, and that could be challenged, particularly in the options world, where you could have really successful options traders who are maybe right 20% of the time. Again, these principles are core risk principles, but they can be argued in certain arenas. And then there's also technical methods that we use, and again, the traditional thing like stop management for trades. Or in the case of the trader business, which you'll hear me talk a lot about that, the business of trading, let's not focus on individual trades. What are your business controls? Do you have a alternative location where you can trade if there's a power failure? What about multiple accounts to spread your capital in case there's a problem with the broker? Not just your money, but maybe just their platforms aren't executing right, or there's a problem, you can switch over. It keeps you in the business. Maybe when you're first trading, that's not too important. You just close it out for the day. But for me, I have to, I'm accountable for that, on a daily basis. And the last part of the risk management process is really measuring and monitoring, another key element. So we've identified areas that we should be concerned about. We've assessed the severity that, hey, this could be a big problem. We put in actions to minimize those exposures, such as controls. And now we're going to measure and monitor what those controls to see, hey, is it impacting our bottom line? Is it helping me improve to reach my goal as a trader? And those can be, we look and say lessons learned. How do we improve our process or refine our strategies? Do we have action plans that we said, okay, we've identified this problem. Now what are we going to do about it? Well, a lot of people will say, yeah, I need help in this area, and they do nothing about it. What do you do in a professional business environment? You set action plans. They say, I'm going to find the solution. I'm going to get the right person to help me with this, and they're going to do it. Well, in the trading business, it's the same way. And when we create things like development plans where we put all these things together, say, look, how am I going to grow in this business? And what I like to do is, and I encourage everyone to actually document it, report it, just like you're an employee in a large company.
And we'll definitely talk about that topic of development, because that's also an area that I love to think about and speak about. Because I don't think that, like you said, most people probably don't spend enough time thinking about how they're going to grow themselves or improve themselves to be able to meet some of their long-term goals. But taking a step back for a second, so I think what you said there is very powerful, and the idea being that a lot of times I see a lot of traders, they just think that all their problems will go away if they could just make more money, right? If they could just get that next trade and make that a winning trade. Where it seems like you're kind of saying that, when I've heard you talk before, some of the lower hanging fruit is around maybe losing less money, right? Or making less mistakes and reducing the frequency in which, you're taking some unnecessary losses.
Great. Totally great. And, we're really focused on the money, and,
right.
we're guilty of that. I still am guilty of that. But at the end of the day, good trading strategies or risk compliance doesn't pay the mortgage.
Right.
It's the P&L. But really, like any business, I mean, I'll give you an example. When my wife comes home at night, I don't say, "How much money did you make today?" From work. Well, I kind of know. I mean, it's pretty much a set thing. Yeah. But I don't ask her that. So why do people ask traders that?
Right.
And why do traders ask themselves that? The question should be, how was your day? Were you compliant with your business plan?
Yeah.
Right? And again, easier said than done. This is not easy. If it was easy, everyone would be doing this. But taking the focus off money, and you've heard this a lot, and it's tough to do. There are controls. Again, let's get back to risk management. Risk controls. Maybe taking P&L off your dome, off your track. There are little things that you can do to help that. But I think it's more of a mental thing where the focus needs to be on business plan execution.
Yes.
And everything else will take care of itself.
And if you can make, if you can find joy in that and fun in that and being able to, follow your plan, and that, if you're able to do that, across, 5 days or 2 weeks or the whole month, if you're able to make that a joy in itself, then the money will come if you can follow your trade plan, assuming you have the right positive expectancy in your trading system. But I firmly believe that. I've heard you say before, like, why don't the pros measure their performance in dollars and cents? So you just kind of talked about it already, but maybe riff on that for a second.
Yeah, sure. I mean, well, think about it as, and I, as an employee in a company, okay? Yeah. And I still do risk consulting work in addition to my trading, just to keep me in that mindset where, trading has this, one of the benefits, or you look at articles, benefits of trading is, you're your own boss. Well, guess what? One of the biggest concerns about this business is you're your own boss. So,
right.
When you're on on an assignment, say in a company, and a lot of traders, work on the side or they trade on the side and they have jobs. Your boss they're not looking for what was your quote core results. Maybe in sales there may have been, but even in sales, let's do it. Obviously you want to make more sales and generate more money for the firm and probably for yourself. But really, what are the things that your sales manager is going to be asking you? How many appointments do you have this week? Did you distribute so many brochures? Like, they're looking at metrics that have nothing to do with, did you sell this guy?
Right.
And again, there's certain industries where it leans more towards that. But they're looking at core decisions or core actions that they know will lead to, a certain result. And particularly in, like, say, project management or things like that, where, the project manager is not going to ask you, what, did you get to the result yet? They're going to say, are you following the steps that I put in our plan for you to do that? And really, like a trader, they should think about it like they're in this business. If they're going to follow the plan, I'm going to get rewarded and probably promoted. And if I'm not, my boss is probably going to let me go. And the problem with trading is, at the end of the day, if you don't follow your plan, you don't let go. Just the next morning, you just put on a different shirt and say, "Hey, I'm still with the company."
Yeah.
And that's the sort of challenge I think that individual traders have. Look at it as if there's a boss overhanging you and saying, "Look, this is easy. Just execute this plan. Don't worry about failure. In fact, if you fail, I'll still keep you." But
because then you can course correct, because then at least you have the data. You can actually see where you made some mistakes, and then course correct if you need to, versus just kind of free-forming it and freewheeling it.
Right. And so we're measuring, as the trader community, or at least we're measuring the wrong stuff.
Right.
We're measuring P&L, and it's. I know it sounds like a broken record. A lot of pros and say this, but I can't pound on it more. And guilty. I'm guilty too. I do look at it sometimes during the day, but just focusing on the job at hand will get you to the next level.
So do you think it's better to focus maybe on, instead of like P&L, like you said, focus on, trade plan compliance, or maybe the way you're managing your risk? So, counting R's, so risk to reward ratios versus actual dollars and cents. Do you think that's preferable, or is it just all about trade plan compliance? What's your opinion on that?
I think the above are pretty good. Anything other than P&L, and honestly, P&L can be a very valuable metric. I mean, at some point it has to be.
Right.
So, but what I look at is, I would suggest develop sort of key metrics, particularly around compliance. I mean, I'm a risk compliance guy, so I'm going to promote this part of it. There are other elements, but since I'm the specialist on this area, I'll focus on that. Really about, rather than focus on P&L, let's again keep it within a trading world.
Yeah.
Where was my entry? I'm a big thing is in risk management. You can identify risk control. In other areas, but what can we control during a trade? A lot of it is just the entry. I can control when I'm going to get in. I can control, my targets and stuff. But really, once that, it's kind of up to the trading gods to let their variances do their thing. And hopefully, I have a historical, edge based on historical trade. When these things set up, then X will happen, 60, 70% of the time. Yeah. But focus on, was my entry appropriate? Did I use a data-driven indicator or something to say, yes, this is when I was supposed to execute? Because a lot of times, the difference between a winning trade and a break-even, and sometimes even a losing trade, is where did I get in? And and you could measure that through measuring your trade activity. One of the other compliance things you could look at too is win. Percentage win, or points gained on winning trades versus point gains on losing trades. So winning versus losing sometimes could be skewed because, particularly in options or, in certain futures, if you're taking smaller profits on winning trades and, letting losers go a little longer, you could have a positive winning percentage, but, be down. And when I do trade journal audits, or I encourage traders to look at their information, that's one of the key ones I look at. What is your winning trade gain versus your losing? It doesn't necessarily have to be 5-1 or 3-1. Again, options traders can have a negative number, but what it does is it again identifies, first step in the risk management process. It identifies that you're taking your profits too early, and maybe you're giving your losers a little more too much time to run.
Yeah. And we'll talk more about the trade journal in a second, because I think that's a very, you have some very good ideas around that. But maybe I'll just circle back for a second and just ask you one question around what you kind of brought up already. So, I've heard you say in the past that traders should perhaps think of themselves as project managers as it relates to managing risk. So why is that? Why do you think that we should take that kind of, PMO approach versus, I'm just a trader. I shoot what moves.
Yeah. To be honest, at least my experience and some of the traders I've worked with is once you bring the emotion into trading and you start thinking like, I think the market's going to do this, the success rate just goes down. Yeah. So project management is a very defined, documented plan, and what it requires is execution. And the premise of a project is, again, doing your due diligence like a project manager would do, is if we do this, if we execute this properly, the assumption is that based on our history, it will come out to meet our expectations.
Yeah.
So I think the focus is on a lot of traders is their opinion about the markets. And I got to tell you, I've been doing this, Houston, for since 15, 17 years.
Yeah.
When I base my trades on where I think the market's going, I'm tops 50%. Tops. So, and there's been studies about market randomness and things where really it's just, in a sense, a 50-50 game. And, at the end of the day, you can use risk management to push your edge from a 50-50 game to, say, a 55 or something. But you have to be perfect in execution. But I found that it just doesn't really work too much. So as a project manager, really, what is our goal if again, you're in a company, your boss says, okay, we got this project we got to do. What is he basically saying? Execute the plan.
Right.
Right. So if we focus less on the world of trading, all the flashy lights and the price movements and things like that, this is what I'm supposed to be doing. This is my job as a trader. I am a project manager. Matter of fact, fire yourself from a trader. You're done. You are now officially a project manager starting today. All right. And my job is simple. It's a 1-sentence job description. Execute this plan.
I love it. Yeah, I love it. And so what do you do then? So I know you work with a lot of traders. Does this approach, does it work for everybody? Because I could see some traders, they may feel like they're getting handcuffed because they like kind of being discretionary. Do you find there are certain, I guess, personalities have a difficult time accepting this kind of approach, or do you have to be more, more conservative? Not conservative, but maybe that's not the right word. But I guess more more critical thinking versus more discretionary. Is there any validity around that?
Oh, I agree. Yeah, and there's a lot of and again, a lot of the great guests you've had on your podcast, talk about the psychological aspects of trading and stuff, and that isn't my specialty, but clearly there's an element to that.
Right.
And this is where the nice Mike Toma gets to be a little more strict as far as a teacher student.
Yeah.
And I'll just say it like this. And my mentor told me this: treat this business correctly, because you are a little crumb that you're a little bug trying to eat a crumb, and there's a big monster trying to push you aside. So he'll let you take the crumbs, but if you start pushing that monster, you're going to get crushed.
Right.
Okay? But so here's my kind of response to this, and I'll just say this directly. And again, we're trying to help traders here, and if you don't like taking the disciplined and focused approach on how to be successful, get out of this business. I mean, there are so many distractions with trading, that and it allows you to provide your own market opinion and this, and you have winning trades, and you brag to your friends that you're the greatest trader in the world and everything. And but if you're not going to be disciplined and follow a strategic plan, and again, not just project management and stuff, I know that's my philosophy, but having a structure at least that you're going to follow, I say just, what, and I've told students this, I think it's time you get out of this business. I mean, if you want to just throw money away, let do something good with it or something. Get out of this. But, I kind of try to shock them in that sense. But at the same time, what I'm trying to do is instill some type of structure. And I will say this, and I've learned, you do get people that I know in the back of my head, I want to give them the opportunity, but I don't know if they have the mindset, because a lot of people just don't know how to follow rules. Now, I will say this. You know who else didn't know how to follow rules? Bill Gates, Steve Jobs. So there's some great entrepreneurs who, and I would almost encourage them, what? Don't get out of this business, but stop being a trader and start building really good technology for our industry. And they'll probably have a much bigger house than I'll ever have.
Right.
So yeah, it is. This business kind of allows a ticket to the show if you have bankroll, and unfortunately, the vetting process. There's no vetting process. I mean, there is no interview in a sense. The interview is I have capital, but to be successful, there is a very, very heavy, very strict interview process that needs to be done, and unfortunately, it needs to be done with yourself.
Right.
And sometimes people take it the right way, and some people just pay the price through tuition through P&L. But
so true.
Yeah.
So true, because like you said, the bar to, I guess the bar to entry is low, but the bar for success is high. so certainly you get all types of individuals, and maybe like I said, the mavericks out there who who have that kind of shoot from the hip approach to life. They struggle a little bit more as they have less structure or are less willing to adopt structure. But maybe those folks who if they can. If they just learn in the beginning that they need a bit of structure, that would also help their journey quite a bit. Because I think a lot of people try to figure it out on their own, and I'm guilty of this for many of my earlier years, is just trying to figure it out on my own and just kind of getting lost in a quagmire, not really understanding how to get out of it because I wasn't really, doing the fundamentals like journaling and putting the systems in place so that I could understand where I was making mistakes and where I was making, the same mistakes over and over and over again. So.
Touche.
Yeah.
And we're doing, Houston, we're fighting a human element. Yeah. It's not a bad person or this person's not fit for this.
Right.
We're fighting a human element. That human element of, I don't want to touch the stove, it's too hot, but I know I'm going to touch the stove because I got to find out if it's hot. Right. And in this business, the market kind of just finds a way to make sure they expose every little piece of challenge that we have. True. And we have to almost rewire our thinking. And I know that's very, business psychology and stuff, but and I used to laugh at that stuff when people used to tell me, like, we have to rewire your thinking. Look, just show me the setups, But 10 years later, I'm saying we have to rewire our thinking. And we've all paid the price that way. So
yeah. So let's talk a little bit more about the trade plan. So I think you've pointed out in other places that surprisingly, even though everyone's heard about the importance of a trade plan, probably at least 80% of traders probably don't have a defined trade plan. But if you do, have a trade plan and you are diligent about, defining that and trying to follow it, it's still sometimes difficult to remain in compliance with that trade plan. I know myself, like, my goals for this year have been, trying to be as compliant as possible around my entries and my exits and so on and so forth. But even just being compliant is oftentimes difficult for many reasons, such as, like you said, maybe not having the right level of focus, or maybe not being able to be at the trade desk at the right time of the day, or, just getting pulled off on other things. So what's your advice around traders who have that kind of trade plan in place, but having a difficult time with compliance issues? Do you have any ideas around tracking that or, managing that? What are your ideas?
Sure. Well, there's ways to track it, and there's key metrics that we talk about, and certain things as the win to loss ratio or the points gained, point loss. But I really like to look at internal compliance, and the few things that I would recommend that traders who are struggling or just want to really improve their game is take that independence away from the trader's sort of beauty about the trading business. You're a free, independent person. Take that away and put it in the negative column. So the first thing I would suggest is, you don't have a boss in this business? Find a boss. Find a boss that has the authority to make you accountable. Okay? And I'll even go one beyond further. And that could be, a fellow trader. I mean, your group is great because you have fellow traders, within the same community. Yeah. Some which have certain skill sets and some which maybe are struggling, and you can kind of cross-match them to put the ones with the strength that has the person with the weakness. But I have a fellow trader, a mentor, of course, there's risk professionals, or even worse, dare I say it, your spouse, who could be the worst accountable person that you want to deal with. But I think it's good to get them involved or a partner. Okay, so find a boss that has the authority to make you accountable, because once you have to report what you're doing and the areas that your weaknesses, there tends to be a greater sense of urgency to get it resolved, especially if there's an incentive for both parties. And I'll even go one step further, and I suggest this. Have that accountable person, dare I say, have the ability to turn off your account.
Wow.
When certain metrics, or not metrics, but certain compliance, certain rules in your trading plan are not being met. You want to talk about urgency and how quick you're going to do whatever you can to make sure. Yeah. So it's tough to do that on your own, because you're to be accountable to yourself is very difficult. So one, find the boss. The second thing I would recommend, and these are good takeaways that you can communicate to other traders, is try trading. This is right while you're trading for the day. Try using internal indicators only. So take away the chart, okay? Because price is really just an attractive mechanism to want you to get in there and dance, and it lures you, and things like that. So, and in most of the time, it just, even if you get into the dance, you get into the bad price, or you end up chasing the person you want to dance with, and next thing you know, it just doesn't work out. So try trading using internal indicators. In sim, that's fine in the beginning. It's it's just very different and very freaky, because you're in the back of your head saying, what's the price at now? Okay. But try doing that, and when you go through workshops, and I try to get the traders to say, okay, push the button, and I'm a big New York Stock Exchange tick fan. That
Yeah.
to me, that's like my number one internal indicator as far as
Okay.
entry. So I'm just going to push, the sell button when it's at a high extreme and buy it back when it's at a low extreme, things like that. But again, it gets you in the mindset of execution. And execution by using data-driven information, technical information, not price. So whether it's New York Stock Exchange tick chart or market profile value areas, whatever it is, and that's part of the development phase. Try doing that, because what you're doing is you're coding your mindset to stop thinking about there's a pullback in price, and price is the worst indicator. Use internal indicators again that have been successful, or at least give a historical edge. Say, okay, I may be wrong on this, but I'm getting in at the price that not only is historically advantageous, but is also compliant with my plan. And again, if I'm only focused with that, if I fail, I'm okay with it because I've complied with my plan.
What a great day! That's a really great tip, and I'm definitely going to try that, Mike. I think that sounds really interesting.
It will drive you crazy in the first first day. It is just bizarre, but it's kind of like walking blindfolded. Like you're trying, but don't worry about it. And I've actually, if you want to maybe bring it to the next level, is if you have it on, try to keep when you have like a target's been hit, you have a little sound indicator or a stop. Yeah. Put the entry, and then all you see is your internal indicator and the sound. So, if you hit your target, you hear the sound. It's like, wow, that's interesting. So I did that without looking at price. And I got to tell you, a lot of times my chart is, it's on, but I'm really not looking at it because the indicator is going to drive me to what I'm supposed to be doing anyways. That's
a really good exercise, I think, on many levels, because like you said, number one, it's going to rewire your brain if you do that pattern enough times, and you're going to get into execution mode, right? You're not going to worry about oh my goodness, price is acting funny. You're gonna stop looking at that as being a kind of a trigger for you to do maybe non-compliant things. And the other part I love talking about, just around like price action itself, as you've already talked about there, it just throws out so many social signals, right? So when price moves in a certain way, backed up by volume and pace, I think psychologically, like as human beings, we can see that as some sort of human behavior. And that triggers something in us, right? That could trigger fear, that could trigger some sort of emotion, and it causes us to do causes us to make some potentially poor choices. So actually removing price action completely, that's a fascinating idea. I'll have to definitely try that.
Yeah, and it's not easy. But again, this business isn't easy. And I think people say, well, I'm just going to trade the chart, or I like when the green turns red, or whatever it is.
Yeah.
This business is not easy. So you have to kind of do things. Maybe not outside the box, but just sort of innovative to take you away from the things that are distractions. And price is one of the biggest. Price and P&L are probably the two biggest distractions in this business.
Yeah, that's a good one. So let's talk a little bit more about compliance issues. So for instance, we've all been told that we need to log all of our trades in a journal. So what about the trades that you fail to execute on, that you fail to take? How do you track those types of phantom trades?
Yeah, I think it's important, because when we have, and I encourage people to have a trade journal and put the valid information on there, not just price and what you did, but really just the internals or the things that drove you to make that decision that are in your trading plan, the internal indicator or whatever it was that triggered it. But what I find is most trade journals are basically a snapshot of what you executed.
Right.
And for whatever reason, and it could be all legitimate reasons, there are a lot of times opportunities that you just didn't take. And I call them, like you said, phantom trades. Yeah. But there were valid signals or valid signals that were triggered based on a historical positive edge, blah, 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 that weren't taken. Well, why are those not included in the assessment to see if this setup, this strategy is valid or whatever? They're just as valid. And in fact, a lot of times, and when I do trade journal audits, I look at a trader and say, why didn't you take these? And they say, oh, well, I lost 3 in a row, or the market was tanking. Why would I go long? Or, or something, maybe a legitimate thing, and I'm guilty of this too, is, well, I was up for the day and it was maybe an hour left in the trading day and I wanted to protect my green. Right. Okay. Maybe all 3 are valid, but the phantom trades, when you log them, are going to say, and this is actually an example that I had, earlier in my career, where I said, I want to protect my green too, but this baby's cranking out 72% success rate between 240, the last hour and 15 minutes of trading. Mm-hmm. I mean, I want to protect my green too, but I also want to increase my opportunity.
Right.
So phantom trade, or by documenting phantom trades, they bring out, again, risk identification. They identify opportunities, say, hey, maybe I need to look at this a little more. Maybe I need to make a change to my plan or things like that. So, and really, what are phantom trades? They're the exact same thing as executed trades, except you didn't push the button. Mm-hmm. Well, the market gods don't care if you push the button or not. It allows also to give you a greater sample size to determine, really strengthen the validity of a particular setup. So, again, I try to encourage a lot of traders to do that. I know a lot of the scalpers who have 30, 50 trades a day, that can get a little crazy. Yeah. I guess the takeaway here is, don't just think the ones you push the button on are the ones that you're going to base your entire trading plan on. Because let's face it, when you push the button, maybe you're pushing the button incorrectly, or not the right price, or maybe it's just not part of your plan. Mm-hmm. There's a ton of information in these, quote, phantom trades. And, again, a little outside the box, but I encourage everyone to at least think about that.
So tactically, would you just put the phantom trades as another entry in your journal log and as a trade entry, and just comment that it wasn't actually taken, that it's actually a phantom trade? You just put them side by side, or would you just keep it in a separate journal saying, I missed these 5 trades for these particular reasons?
Sure. I put them right in the same trade journal. And really just if you're using a spreadsheet, I try to keep things simple, but most traders want to use a spreadsheet. Just an indicator that says A for actual or P for phantom, so you can sort it. And if you do actual versus phantom, you may be surprised of, oh, wait a second, I have the, say there's a particular setup that you're tracking. One category, if you have multiple setups, you're saying, okay, this is setup number 1. Interesting. My success rate on actual executed is, say, 58%, and okay, that's good, and I have a good P&L or whatever it is. But my phantom ones are 67%.
Right.
Why is that? I don't know. But you know what you did? You just started the first step in the risk management process. You've identified something where you say, I need to look into this. I need to what? Do the next steps. Assess, control, measure, monitor. Yeah. So I think it's a valuable information. And you know what? Maybe some of the information that comes out of that is nothing. So what is that telling you? You know what? I'm executing my plan pretty well. If it ain't broke, don't fix it. I'm just going to stick with it.
Right. And so do you have any thoughts around, who should use a trade journal? I know you work with retail traders as well as traders, in the hedge fund world. Do traders from all levels benefit from the trade journal? Because I hear of some traders who've been, they traded for a while. They say, I don't need to trade journal anymore. I did it for many years, and now I'm done with it. What's your opinion about that?
Yeah, I think, there is such thing as the best surgeon in the world. But I guarantee you, if he's the best surgeon in the world, he's probably thinking, I know I can do better. Now, when you're in a hedge fund world trading other people's money, there's a risk manager in that firm saying, I don't care what you say, I know, there's always something. There's always a method to improvement. One of the things about trade journals, though, and I would encourage everyone to have some type of, not just documentation, but some type of data that provides analysis. And the good thing about technology, when I first started out, the technology was the spreadsheet. Now, you could just push a button as your broker, and they generate all this stuff for you and sort it anywhere you want. In different audiences, it may be different. A hedge fund may have a risk manager. If you're your own trader, you are the audience. You are the accountable person. But one of the things I think it also will help, if you're not specifically inclined to think that you're able to improve, it also may be able to sort of fine-tune what areas of the day that you have the most impact on, or what's the most things. So some traders just have interesting lifestyles, and they say, look, I can make 90% of my profits in this hour and a half according to my documentation, and I'm going to do other things, or whatever the case, or they're really focused in on this time of day because that's when they're really, so they can kind of have the screen on, but maybe do other things. It's just, there's a lot of things that can come out of it. But I find it very difficult to think that it's an investment in time and effort that wouldn't pay off, particularly for younger traders.
Yeah. And it really just kind of layers into what you've written in your book about having kind of that data-driven approach to risk management and trading. So, what do you think should be in a good journal? So, aside from your standard, profits and how much you won or lost and when you took it, what else should be captured in a good journal?
Yeah, I mean, those things, I never stop people from doing it. Those elements, honestly, P&L, like, I really don't want to see it. I usually I just hide that column because, again, if I'm trying to develop traders and even myself, that it's a very poor indicator. In fact, when I see too many big winning trades in a row, there's always that variance where you're in the zone, but that concerns me to an extent. To me, that's a red flag. Like, what are you doing here?
Reversion to the mean at some point.
Yeah, and also maybe you got those high profits because you're taking more risk than you should, and that will eventually, the big reversion to the mean or the big reversion to insolvency. But one of the things, like, here's a couple things I would like to see traders add on there. Yeah. Again, it sounds like a broken record, Houston, but was I compliant with the trade?
Right.
Okay, so trade compliance. Was I, and I want to see, once you have a trader that's really starting to kind of catch on to this dynamic to add to their trading arsenal, you really want to see 92, 95, 97% trade compliance. Okay. When you start to see that, look at that as sort of a promotion or a reward for you. So, and I'm not sure if I discussed, so I think maybe in the book there's some mention of it, but, reward yourself, not for P&L, but trade compliance. You can take, I take futures rollover day, which is tomorrow, by the way. I take that day off because if I'm compliant with my plan, it's like a reward for myself. And after certain other things, I'll take trips and things like that. And I put pressure on myself, say, okay, I want to go to this, to this expo or something, and say, you know what, in 2 months, I got to earn that. And plan compliance, track through your trade journal, is a great way to say I'm on the right track. It also identifies areas that, maybe there's so many things here that I have to measure to be compliant. Maybe I have too many things that I'm measuring, or it identifies a core problem that we really want to resolve before you sort of promote yourself or graduate into higher trading contracts and things like that.
And I think what you've talked about there is just having numerous carrots and sticks in order to ensure compliance, right? So making sure you're having a bit of fun by giving yourself some rewards so you can actually enjoy the process. But also, I love the idea of maybe outsourcing some of the compliance, I guess, or the actual getting you to comply to your trade plan by pushing it out to outsourcing to an external party. That's a great idea. But talk about the graduation plan. So you just name dropped it there. So I think the idea there in your book, you talked about using a framework around when to add size to your trades. We've all, when we have a number of wins, we have the gut feel that we want to add size. But the graduation plan, when I read about it, I'm like, this is a great kind of structured way to kind of layer into growing the size of that setup. So talk us through that.
Sure, it's without doubt the most popular topic after I speak in seminars or people write up the book. They all lean to this graduation plan. And to be honest with you, it's so simple. Yeah, it's such a simple concept, and I'll explain it to you that. Really, it's one of those things that I never thought would get that much traction, but it's very effective. And what it basically is I'm going to keep this as simple as possible, okay? Yeah. It's a risk management methodology where basically that deals with size of your trades, whether it's shares of if you're trading stock or futures contracts and things like that. The whole concept is when you're learning or trying to execute a strategy that you're just getting familiar with, let your results dictate the amount of quantity of contracts or shares that you're trading. One of the questions I always hear is, how many contracts do you trade, or how many shares do you trade? This is one method in which you never have to answer that question because it's already going to be dictated to you by this plan. So simple enough is you start a new trading strategy, or you heard it from a friend at a conference, and this is the holy grail. Great. I'm going to look at this. I'm going to set up my charts or whatever and do whatever I got to do. You start out at the minimum level, or even, I would suggest even simulation, right?
Yep.
Let the strategy dictate if it's working well. You want to look at these strategies as your employees. Okay, we're going back to the business mindset. These are your employees. I have, say, 10 strategies or 10 employees. One of them is just out of the gate going crazy. It's just very consistent, a couple stumbles here and there, but consistent. I'm going to promote that guy. All right. How do you promote yourself, your strategies in trading? You increase your size.
Right.
Okay. What am I going to do with the ones that are struggling? Well, I'm either going to kind of work with them or try and figure out what it is, a little bit, or I may just get rid of them. All right. And I may just end up with 3 good employees that are just, all secretariats, just constantly cranking out good results. This is my business, and that's what I want. I want successful strategies, and I'm going to get rid of the ones that don't. But also, it's going to identify maybe the strategy. It's obviously working for this other person, or I read in a book, or a seminar, or webinar. Yeah. Maybe I'm just not executing it properly. And I've had that in Houston. I'm sure you did. Some really good strategies, and I see people use it, but I just like, you know what, Mike, I don't get that market profile thing. Well, you know what, I do, but that's okay. Then take it out of your plan. Take it out of your arsenal. It's kind of weird with all those little point and figure letters and stuff, and some people just don't like it. That's fine. So not only do you identify ones that are successful for you, but also identify ones that maybe you just have trouble executing. But you're doing it at such a low risk level financially that you can afford to kind of pay the price. Or if you're in sim, sometimes new strategies that you have may never get out of the sim level because it hasn't had the results to do that. Yeah. Well, no harm, no loss, So what I like to do is throw things in the hopper, because we're always inundated with the latest and greatest new strategies and all these things. And I know a lot of educators say, well, that's all crap and this is the only way to do it. No, I say, you're a businessman, you're a business person, go for it. Throw it into your graduation plan and let the results dictate should you promote them or fire them. And a lot of times when you have these strategies that just don't work, sometimes it's just the little nuances where like maybe one element of the strategy looked pretty interesting, and then you incorporate that into another one of your successful ones. And that's how you develop not only as a trader, but you develop your business as a trader.
Right. Yeah, so well put. I really like that exercise. It really builds, like you said, some confidence around your setups, because it allows you to add size responsibly. And for the ones that aren't working right, you pull them out, you get them back in a sim mode, you kind of revamp and get back to it again. So yeah, that's a great tactical tool.
Yeah, how many traders have blown up because they blew their accounts? Well, the graduation plan concept isn't going to solve all the problems, but it will definitely. You cannot go insolvent. You cannot blow up your account if you use the graduation plan. So it's not the holy grail for everything, but at least will keep you solvent. And in this game, your account is your capital is king. So if it keep you solvent, sometimes it will buy you time. So the graduation plan, one of the biggest assets to it is it buys you time during the development phase to where you can kind of learn your strengths and weaknesses and make your mistakes at a very cheap level.
Yeah. And if you're a new trader and you're inundated with strategies like Michael said, and you have a dozen strategies or a dozen setups, then this is a perfect way to begin to properly test these things out. So you need to figure out which ones are the setups that you really want to invest in, put money behind, and let the ones that don't work so well, let them kind of slowly get off of that graduation plan. So I can't agree with that approach more than that.
Yeah,
so
think of them as your employees. That's
your employees.
Yeah. That's it. Promote or fire.
Yeah. And do you have any opinions about, in terms of just sample size, when you're doing going back to trade drilling for a second, do you have an opinion that do you need to have 30 or 50 or 100 trades before you can do some proper metrics on your trade journal?
Yeah, it's a fair question. I revert to more traditional accounting, sample sizing, things like that to do. But to be honest with you, if your setup doesn't occur like every day, after about 30 seems to be that like agreed upon number where you could say, okay, this is maybe working, and you're going to have days where just the randomness of the markets, aren't working. But to go from like 30 successful outcomes to 30 negative ones, net. It's going to be difficult. I mean, that thing should be consistently, improving, and then maybe a little pullback. So 30 is a good number. If you're actively trading, 75, 100. There's some strategies that they say, like, with variance, you're looking at like 1100, and I put in the book something 1170 something. I go, by the time you figure it out, you're you're being foreclosed on your house. So, but yeah, and I use and again, to promote yourself, I use a variance of say 30 or so. And there's there's things like standard deviations and normalization stuff, which again, I don't like to get the new traders too involved in that. But when do you promote yourself? You could use like a plus 15, something like that. I mean, you think of it, if you've had a net success of 15 trades, you could promote yourself at that level. And again, you're not like betting the ranch. You're going to say a level 2. And by the way, if you find a level 2, this isn't happening, you're going to revert yourself back to a level 1. Right, because a lot of times what that tells me is the strategy is working, but now scarcity is coming to play.
Yeah, you're not ready yet.
Of trading a high side, and you're not ready yet. But you know what? Eventually you keep doing it, you will. And maybe there's, again, risk control techniques, maybe systematically executing your trades, to get rid of that emotion. But that's a good problem to have, And I'll be honest with you, I still, at some points, like especially with these markets of late, I'm at levels where, I had to pull back, the heck with the graduation plan. This is just too much for me. So, you just make good business decisions.
And so when you're talking about jumping from level 1 to level 2, is that kind of coincide with, let's say, jumping from like risking 1% of your portfolio per trade to 2%? Is that the kind of idea you're talking about there? Or, adding contract size from, 5 contracts to 10 contracts? Is that what you're talking about?
Yeah, I'm looking at size. Size. Not necessarily. I mean, you're obviously risking more dollars, but the thinking is you should have more dollars in your account at that point.
Right.
So, eventually in this business, Houston, I mean, you have to, and it's a tough thing. You have to, once you become very well successful at a certain strategy or two, if you really want to make it in this business, I mean, you really have to start increasing size. And that is a additional challenge beyond charts, beyond risk management. There's a behavioral thing that really comes into play. And I mean, you talk about some of the traders, in the Chicago pits when they were around, and some of the hedge fund ones, they still struggle with it. The only difference is, hedge fund firms can have and they do have professional psychologists on staff to work these traders through this thing. And basically what they're doing is they're working them through the graduation plan. I mean, I'm sure they're using much fancier systems, but and I've actually worked with psychologists who've had high wealth clientele to get them to that next level, because it's a struggle. But believe me, that's a good problem to have. And obviously, when you're at that level, even going from level 1 to level 2, or even SIM to level 1, congratulate yourself, reward yourself. I mean, that is not easy. And I rather than think this is a burden, I get excited. Say, hey, I got an employee now. I'm not only is it valid, historically valid data, but I'm able to execute it. And both have to work in order to promote yourself.
Yeah, and that just increases your confidence. That just becomes a virtuous cycle. So that's well said.
And to be honest with you, one of the risks is I find it too much sometimes. Like they're wanting to go to level 2, 3, 4. Like, hold on, let the system work for you. And and patience is
slow and steady.
A big problem. Yeah. So you've rewarded yourself, and as soon as you reward yourself, and I know risk managers always have this like, what's the problem? They always look at the negative thing, but you just rewarded yourself. But you know what? You just inherited. Now all of a sudden it's like a bull in a china shop. It's like, hey, relax. We have to stick to the plan. And a new set of identified risks now come into play. So.
Right. And so with the time remaining we have, maybe we could just touch on the topic of development, because we just started talking about investing in your mindset and doing some development around your psychology. But everyone's heard of having a trade plan, but I don't think everyone's kind of formalized a development plan for themselves. So what are your thoughts first off on just on mentorship and coaching? Where do you place that on the spectrum of development?
Sure, I think it's an essential part. You're right. Very few people and trading coaches really talk about a development plan per se. It's more about focusing on their weaknesses, and
Right.
development plan is a part of that. But again, let's go back to the corporate world. I mean, when I'm reviewing an employee or boss was reviewing me, they'd have that annual review or semi-annual review. One of the things is, okay, these are the things you did well. These are the things I want you to work on. But really, if you want to develop with this company and get to that next level, not necessarily in your job, but maybe another department or something, these are the core skills that I want you to kind of work on. So they'd give you a little development plan, and you do them, take your classes. Well, again, taking that concept into the trading world, it's very effective. So, realistically, what I'd like traders to consider is the first thing is to do what they call a SWOT analysis. It's very popular in the corporate world, in employee development and training. It's basically a SWOT is identifying your strengths, weaknesses, opportunities, and threats. So, and again, not necessarily on particular trading strategies, but also your business as a trader. For example, I'm great with identifying trades, but I'm a little slow in pushing the button. I get scared, especially if it's like a reversion to the mean trade where the market's tanking and I'm supposed to be going long. Let's identify, again, part of the risk management process. In weaknesses, obviously, we want to identify those. Threats also is something that I always say, well, what's a threat? Well, a threat is anything that can force you to be outside, to have to give up this business. So the threat is too much size, putting too much money to risk. One of the things I have found is when I work with traders is one of the biggest threats in their business, believe it or not, is their spouse or partner. And it's, it has nothing to do with trading, but why did I have to give up this business? Well, my spouse says I have to get a real job, or they gave me so much time and I couldn't get a hang of it, or they just don't get it. So, there's ways to do that. Engage them in it. Let them be your accountable person. Show them that this is, it's kind of a commission sales job. Like, I'm not going to come on with a paycheck every day, but I'm going to get there. So these threats, and I think it's, critical for the trading mentorship community, but they need to look at these things. It's not just about you're not hitting the setup correctly. It's about what are all the things that are going to be a potential threat to your business. And if one of them is that, I mean, I've been on tables where I've sat with the trader and their spouse, and I say, okay, I need you to walk away. I need to talk to them, alone. And, the spouse walks away. I go, no. I need the trader to walk away. I want to talk to them. How do you feel? Like, are you concerned about this? And they're like, oh, yeah, so I got just get them engaged and look, this is a journey, and some of the things that you need to do to support your trader, partner. So again, it's something that you wouldn't think that would be in a trade, trade development thing. But I think, and again, I think Houston, with these discussions, our discussion today, and all the other people who have been part of your community, these are little things where when they listen to this and say, you know what, that quirky guy from Jersey had a good point with this. I'm going to try that. And if 1-2 people try it, and it kind of catches on, and not everything is going to be used by everybody that we talk about, but again, just getting back to summarize with the development plan is identifying the weaknesses, strengths, looking at consistency.
Yep.
Okay. Success and failure is, I don't look as losing trades as failure. The failure is defined as not executing a plan effectively. So I have a losing trade. I have no problem with that if I'm compliant. Even if they're 5
to do with you. Yeah.
No, 5-7 in a row. The market is its own little monster, and I'm basing on historical probabilities. And I know that there's going to be certain variances and things like that I can't control. But what I can control, if I execute that, I'm compliant, and that's fine with me. So consistency, execution, dare I say the word discipline. Okay. So in your development plan, identify all these. And again, if you can do it with an accountable person. But the most important thing, Houston, is to wrap this up, this concept of development up, is action plans. When you identify these things, have an action plan for each one and say, I'm going to, work on this and things within a certain time frame, and then report my development, at a certain date. And I know I give that. I talk about some examples in the book and everything like that. But it's really important, and it's, again, these are the things that the average trader probably won't do because they either think it's a waste of time or just it's too tedious. But again, if you start thinking about your trading as a business, this is every corporate business has some type of development plan. So why are we not doing this in our business? Well, it's a great question. Keep an open mind to education. There's a lot more education out there when I started. So use that power to learn, educate. Also, educate yourself and really start taking action in trading. I mean, back testing is great, but start pushing the button. But again, use the graduation plan. Do it in sim. Learn at a very cheap price. But you really need to take action. And reading books is great, but you learn by doing in anything in life. So do that. But the other thing too is, again, discipline. Structure, which is, if there's one word that really encompasses our whole risk discussion today, it's about structure. Yeah. But the other thing too is, don't do this alone. Okay, this is a business where the beauty is you can do it alone, but I'm begging everyone, don't do it alone. The other thing too is, and there's communities like yourself, Houston, there's so many people who love to teach, love to help,
absolutely,
and to pay it forward. So take advantage of that. It's one of the things that I didn't do in the beginning. I kind of was a little hermit. So take advantage of that and learn from other people's mistakes. And again, the concepts I'm talking about here, it's not just about trading. It's really about success in business and in life. Don't be afraid to ask and raise your hand and use the power of information that is so accessible now, and much more than when I started, to develop. And just remember one thing is, this business, it looks so easy, but it's not. It's just like going to medical school. I mean, you really have to put your time into do it. And
true.
And the ones that are successful, ones are not, it really comes down to, of all the things we talked about, who's going to put the time in. Yeah. And when I see people, they recommend, because I have some books, Mike, you recommend, and I'll give them some like sort of core non-risk books to start out with, and a few months later they're excited about it. I said, what'd you think? Because I'm on chapter 2, and and then you see other traders who are just like the next day they're through 4 books and reading on the internet more about it, and you could just tell the engagement level is different. So it's like everything. It's not about trading. It's just think like a business person about what it needs to be successful, and execute. And if you don't, it's okay. There's other things in life. Right. But for us, I mean, I think you agree. This is the best business in the world, and it just takes a lot of work. And those who are willing to do it get rewarded.
Nice. Yeah, it's like you said. It's the exceptional performers out there. It's not what they can do; it's what they will do. So that's so well put. So maybe just one more quick question for you. So what about yourself? So if you've been trading since '98. If you went back, about 20 years ago and had the opportunity to give the younger Mike Toma some advice, what would you tell that person around his trading journey?
Well, I think one of the deficiencies is the information just wasn't there. So you had to rely on people. So that was something I just was faced with. But again, I would have definitely been more open, joined more groups and bounced ideas, things like that. I had the drive and ambition, so I wasn't like I was there Saturday morning looking at charts.
So you were motivated,
Yeah, so it wasn't a question about that. We're motivated either by inspiration or desperation, and probably a little combination of both. But I think that I think the focus, and I've learned the hard way, and when I talk about these principles, they weren't just like from day one, oh, these are great. I had to learn the hard way and realize that, I need to work on my core. If I had to do it over again, I would have started not with trading strategies, but learning about core principles about how to be successful in this business, and then take it from there. And how many times do just the opposite? I mean, I speak at seminars, and you do all these things about risk, and you always get the guy who comes up. I just want to know the setup. Tell me
Give me the setup.
What's setup? And I kind of chuckle, but you know what? That was me. So way back when. So develop from the ground up like any business. I mean, you have a restaurant. You don't open on day one with no spoons and forks and no place to serve. Yeah. You get the space. You paint it nice and pretty. You learn how the business works, and then you sort of promote, advertise, get people in, and provide great service. You just don't sit there and say, food's here today. So, again, it's a business plan. And so the one thing I would have done a little better is to treat it more like a business, because I was lured by, the lights and things like that.
The fast money, potentially,
Yeah, so,
Great advice.
Yeah, so it's some of the stuff isn't very flashy in the sense, but it's good business practice. And if you save your flash for buying nice beach houses and stuff when you reach your targets.
Great advice. So what a great conversation today. Thank you so much, Mike. So just the last question. So what's the best place people can stay in contact with you? So if they loved your ideas and they want to follow you, engage with you further, where can people find you?
Well, I tell you, one of the things I don't do per se is I don't have like a trading school or anything like that. I'm very selective on when I can mentor traders, things like that. I mean, they can reach out. Just go to the Money Show websites. I do a lot of work with them in education. You could find me there. I would think there would be an avenue through your group as well.
Sure.
I'd be happy to do that. But one of the things I've sort of there was a time where I did a lot of promotion and things like that, and it's great. But I'm very sort of at a state in my career and life where I'm just content of doing what I can do. And if anybody has any questions, that's fine. I try not to go out there and market myself per se with like the whole thing. Maybe in the future that will change. I don't know, but they could just go through those different avenues. And again, I do a lot of speaking with the Traders Expo, so they can go right to that site and reach me, and I'd be happy to answer any questions they might have.
Sounds good. And I'm so happy that you had a chance to connect with us today and talk to us and give us so many good tips and ideas. So for the audience, as I just said, Mike gave us a bunch of great ideas today, some really good tactics, some really, really good lessons. So what's the one biggest insight you got from this podcast? Let me know. What would you be, just spend some time, listen to the podcast. What will you be willing to commit to trying? So there's so many good ideas here, right? So like Mike said earlier, pick one thing that you heard today and just try that for the next 30 days and see if that makes a difference in trading. If it works for you, let us know. I'd love to hear from you in the show notes. And as usual, you can find the show notes, a transcript of today's podcast, as well as all the resources we've mentioned today on our website, and that's at thetradingedge.org/episode 9. That's it for the show today. Thank you so much, Mike. Had a great time.
Oh, great time, and thank you, Houston, and best of luck to your trading community.
Absolutely. Thank you very much. Bye now.
You've been listening to the Trading Edges podcast. We've taken this interview and summarized all the big ideas so that you can take action. Just head over to thetradingedge.org/podcast to find the show notes, transcript, resources, and to continue the conversation.